Ladies and gentlemen, get ready for a clash of epic proportions that will ripple into the entire crypto market as Democrats and Republicans engage in a fierce battle over the debt ceiling, and the world is holding onto its breath, awaiting the final call that could prevent a catastrophic U.S. default. And if it is actually true that the central banks have an incentive to dissolve the debt and the solution is blockchain technology, then we need to unpackage why they would want to do this, what is their hidden plan to make it happen, how this would affect XRP and the rest of the crypto market, and most importantly, what can you do to prepare? But wait, the plot thickens because amidst this intense political showdown, a bombshell has been dropped from the East. China, which is a formidable player in the global arena, has made its move. China's Zhangxing International Credit Rating Co., in a daring partnership with Moody's Investors Service, has taken the audacious step of downgrading the United States credit rating. And it's a shocking blow as the once mighty AAA rating is slashed down to a AA+. And there's a foreboding sense that more downgrades could be on the horizon. Now, this turn of events is not to be taken lightly, and it comes at a time when tensions between Washington and Beijing are at an all-time high. So it's best to stay prepared by hitting that like button, hitting the subscribe button so you can be notified right away when we release breaking news like this. Because with the US employing more aggressive sanctions, especially in the wake of Russia's invasion of Ukraine, China is determined to challenge America's dominance by forming alliances with the BRICS nations, by forming their own commodity-backed currency and brokering deals for petroleum in the Chinese yuan. And in this gripping tale of power, rivalry, and economic swordsmanship, the world watches with bated breath. So, will the U.S. rise to the challenge and prove its financial resilience, or will China's audacious move shift the balance of power? The stage is set and the outcome will echo across the entire globe. The gloves are off. It's about to be a backyard bare knuckle showdown. So buckle up. Let's back up the truck. Get the guns ready as the clash of economic titans unfolds before our eyes. So comment 777 if you're feeling bullish, like this video, and subscribe to the channel if you're going to become the first millionaire in your family tree. All right, bull runners, welcome back to the channel. My name is Nick Anderson, and our channel is here to give you the best so you can prepare for the worst that's coming in this economy. So hold on tight, folks, because the United States is headed towards a perfect storm of economic drama. It's like watching a carny show roller coaster ride on Wall Street right now, where the bolts start coming off the ride like they do every single year at your local county fair. And the Fed, being the ride conductor, is assuring everyone that everything's going to be fine. And while you're looking to your left, you're looking to your right, and you start seeing everyone's seat coming undone and bolts start flying off the ride, wondering when your seat or your local bank is next to see a massive run. Now, here's the big questions that we need to address in this video. Number one, when will the Fed pivot with their interest rates? And how will that affect the markets? And if Congress does not agree to raise the debt ceiling, how would that affect your portfolio? And most importantly, why would central banks have an incentive to dissolve the debt right now? And what is the preset price for XRP by the International Monetary Fund?
When we talk about the price of XRP, we have to look at the debt. And central banks have an incentive to dissolve that debt right now. And they found a solution, which is blockchain. They actually are going to, in my opinion, based on the research, and also I can confirm this, that the International Monetary Fund has already agreed on a price before all this integration started to happen. So this was a few years ago. They agreed upon a price, and I got a lot of information from Linda P. Jones has a friend who worked at the Central Bank of Australia, and she said that they agreed upon a price, and it's in the thousands. Now, when we again talk about the XRP price, we have to look at the global debt, the incentive for central banks to dissolve global debt, in fact, also to utilize this source of liquidity from XRP to facilitate, transparency and moving into the digital economy. This is what they're going to be using. XRP is a financial instrument to serve the global economy.
So let's start first and foremost with the Fed pivot, because in November of 2021, the Federal Reserve announced that it would begin to taper its large-scale asset purchases, popularly known as quantitative easing or QE, by $15 billion per month and engage in QT or quantitative tightening all through 2022 by lowering their balance sheet. And then in March of 2022, the Fed began raising the effective federal funds rate at the fastest pace in history. And this was done in an effort to combat inflation and bring down their inflation target to 2% so the economy could cool off for a bit. Now, the problem was they had years of low interest rates stacked on with loose lending policies and massive amounts of monetary printing and money printing, creating their own problems. So the Fed has been the firefighter and the arson at the same time. And now the rapid raise in interest rates has been working, and it's been bringing their inflation target down. We're currently at 4.9% as of April of 2023, but it's caused massive panics within the banking sector and multiple bank runs that are just the tip of the iceberg for the economic fallout that is coming to the country. For example, from 2008 to 2015, during the real estate market crash, Washington Mutual Bank, with over $300 billion in assets under management, collapsed, along with dozens of other smaller regional banks that it tipped into, which allowed JP Morgan Chase to accumulate them, becoming the largest bank in the United States. And just recently, First Republic, Silicon Valley, Signature banks collapsed. And as you can see, this is a much larger banking snowman that is going to be an absolute disaster when the snow melts. And currently, inflation is still nearly 3% above the Fed's target. So the markets are expecting one, maybe two more rate increases of roughly 25 basis points the next 1 to 2 FOMC meetings. And some Fed officials are signaling that the peak interest rate may be around 5 to 5.25%, implying that the Fed could be close to finishing their rate increases. However, other officials are not as certain, and the decision will depend on incoming data on inflation, employment, and the impact of the recent banking failures on the rest of the economy. So when the May inflation data comes in, that will give us a better understanding of how soon the Fed could pivot. And the next question is, how will the Fed pivot? And then how will the Fed pause? And then how will the lowering of their rates affect the crypto markets, the stock markets, and the rest of the economy? Well, we don't have a crystal ball here, and the local psychic down the street, she won't lend me hers because, I don't know, it must be out of batteries or something to predict the future. So instead, what we're going to do here is we're going to look at the past when the Fed pivoted to see how that affected the stock market, because crypto has been correlated to stocks, and crypto is relatively new compared to the stock market. So since the largest investors and hedge funds, they diversify, and as you can see in this image, the majority of market crashes didn't happen during the rate increases. As we can see back in 2019, 2007, 2000, 1981, 1973, and 1969, the Fed pivoted, and we saw the S&P 500 crash between roughly 27 to 58% during each of the crashes. And this goes against what most people think, because raising rates makes it more expensive to borrow money. So naturally, the markets would contract when they do this, right? Well, however, because the markets are forward-looking and investors, they buy or they sell the rumors and the news rather than the actual fact that takes place. As soon as the Fed announced that they would be tapering their bond purchases and cutting their balance sheet, they didn't start doing that until April of 2022, but the crypto market had already topped out, with Bitcoin reaching almost 70K in the beginning of November of 2021, and the S&P 500 peaked shortly after in the beginning of January 2022. So it took the Fed until the end of April before they started lowering their balance sheet, but by then the damage had already been done, and investors were selling the rumors before the Fed could even act. And the savvy investors that were subscribed to our channel were prepared for this, because we were warning everyone of a market top based on the 4-year market cycle theory, which also plays in line with Bitcoin's halving cycles and the Fed's interest rate hiking cycle, interestingly enough, as well too. So listen to this and hit that subscribe and like button if you appreciate these type of market breakdowns. When the Fed decides to pivot and starts lowering the rates, that's because they want to avoid further economic problems and bank runs to lead into a soft landing rather than a hard landing. But when that news comes, uncertainty amongst larger investors happens because they study history, and based on the past, when they pivot and they lower the rates, markets see short-term crashes. So does that mean that, Bitcoin, the rest of the stock market, and your portfolio will take a dump when they pivot? Well, not necessarily. But if the past is any indicator of the future, then it's definitely something to be prepared for. And I'll share my prediction with you in a little bit and what I'm doing to prepare in case this does happen so I can back up the truck more for the dip with passive income from my artificial intelligence online business. But this time around, it's very, very different than the past because if Congress does not agree to raise the debt ceiling in time, then that will cause more panic in the markets and be terrible for regional banks and smaller banks and the entire market. So why would central banks have an incentive to dissolve the debt right now? And what is the preset price for XRP by the IMF? Because over the past 100 years, the banking industry has witnessed substantial consolidation over the past century, with many smaller regional banks having merged or been acquired by larger institutions, leading to the creation of larger commercial banks. Because from 2007 through 2013, the number of commercial banks in the United States fell by more than 800, which was a 14% decline. This drop was highly concentrated amongst smaller community banks, which are banks that have less than $50 million in assets, which saw their numbers shrink by 41%. So anytime there's an economic crisis, smaller regional banks are gobbled up by larger commercial banks like JP Morgan, Wells Fargo, Bank of America, the list goes on, which are tied to the Fed, who are more easily influenced by the Fed to usher in their FedNow system and adopt their CBDC program. So the incentive for central banks to dissolve the debt could potentially have something to do with the global CBDC and digital currency agenda, but that's not financial advice. Those are just some theories of what some people are saying and what some official documents from the Bank for International Settlement and the IMF are hinting at with distributed ledger technology. And Ripple, which created XRP, just so happens to be the #1 company in the crypto and blockchain space that is working with central banks around the world to pilot and launch their CBDCs with distributed ledger technology. And the head of the Bank for International Settlements said it himself. He says they don't like cash because they can't track purchases and see where people are spending their money. And with Project Icebreaker, they will have full control over all your money and see every single transaction. So they're not coming after your guns here. They're coming after your money because those who control the money control the laws because they can pay certain politicians to influence their decisions. And when you control the money, you control the world because as human beings, we are the only species that has to pay money to live on this planet. Really think about that for a second. Animals don't have to pay. Plants don't have to pay. We have to pay. So those that have to pay to play. So that leads me to the next question, which is, what is the predetermined price of XRP after the whole debt ceiling distraction and Ripple versus SEC lawsuit is over? Because the CEO, Brad Garlinghouse, says it could come any week now rather than months as we near the end and the judge to make her summary judgment. Because what's interesting is Ripple publishes quarterly updates on the state of the XRP market. And this chart shows quarterly net sales made by the Ripple team. It is distributed by over-the-counter sales or OTC sales made to institutions and sales made to cryptocurrency exchanges that don't directly impact prices on crypto exchanges. And as you can see, even during the bear market, OTC sales dwarfed the sales back in 2017 when XRP surged over 60,000% or between a 600 and 700x. So hypothetically speaking, if the price of XRP is already preset by the IMF in the thousands of dollars, like a lot of people are predicting, and Ripple is selling XRP over the counter to massive institutions and banks for them to back up the truck, and then they announce the price publicly after the lawsuit, then we could potentially see something happen similar to the passage of the Gold Reserve Act back in 1934, when American people could no longer hold gold legally. And the purpose of this policy was to consolidate and strengthen the country's gold reserves, as hoarding gold by the public hindered the ability to control monetary policy and stimulate economic growth. And by prohibiting private ownership of gold, the government aimed to centralize and manage the nation's gold reserves more effectively. And it's interesting how the SEC has targeted Ripple to centralize the control before they launched FedNow and their CBDC program globally using distributed ledger technology. And if they say, hypothetically speaking, I'm not saying that this is going to happen, but if they say that Americans can't hold XRP, which they've done on centralized exchanges in the US right now, because they need to use XRP to communicate a digital value globally instead of having to do it physically essentially making XRP the new standard instead of the gold standard for international exchange. So that's what a lot of people are saying. Will it happen? Well, I believe a bigger question to ask is, if it does happen, then what are you doing to store your XRP? Because centralized exchanges wouldn't allow people to hold it, and offline hardware wallets and companies like Ledger or Trezor could be targeted by the SEC as well to reveal the XRP holdings. So what would you do? Well, I'm going to leave a resource below this video that you guys can check out, and that's going to entail my plan to prepare, because it's very clear that the spending power of the dollar is going down in value, and there is a reset on the horizon. Digital currencies are the future. They have to be, especially if we're going to colonize Mars. How are we going to send money to another planet? You're not going to pack thousands of pounds of gold in a rocket ship and send it months away. That's not going to happen. You're not going to put dollar bills, because those are essentially worthless. You're going to push a digit on a screen, and it's going to send digital currencies interplanetary. And if you're just sitting there waiting right now for debt forgiveness based on theories that you're seeing online and a global reset wiping out all the debt, that's wishful thinking. Because if it happens, awesome. But if it doesn't happen and you're not preparing, while your debt just keeps stacking up, your student loans keep stacking up, and your savings is getting eroded away due to inflation and poor monetary policies, then you will be absolutely screwed in the future if you don't have a tactically superior plan to protect and grow your wealth during this blockchain and artificial intelligence revolution. Whether the new global currency of the future is a precious metal backed, a commodity backed, or it's an XRP backed digital currency, or all of the above, or maybe even none of the above, with central banks controlling their CBDCs,